Will Bitcoin go bullish next? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. After completing KYC and depositing $100, you can receive an immediate gift of a Bitcoin contract position worth $1,000. These are what you need to do. Click the link below. Complete KYC and deposit $100. Then, you can choose to receive either a long or short position, which will be opened for you instantly. If the market moves in the direction you choose by 10%, you will have already doubled your investment. With a $1,000 position, a 10% move means a $100 profit. Click the link below to take advantage of this offer. Now, let's return to the daily chart of Bitcoin. As you can see, we had a small upward movement today. This small increase was influenced by certain news related to US bonds. Well, let's not delve into the details. Let's just touch upon it briefly. Now, looking at the chart, you can see that the price has been oscillating in the upper region for quite some time. It's been quite a long time. The price oscillation has lasted 71 days. A continuation or a box pattern at the top like this, oscillating for 71 days, is already considered quite long. 71 days. The volume it has generated during this oscillation is 951,000. Compared to the volume of the lower region, I believe that the longer the price action oscillates, the more unfavorable it becomes for the bullish scenario. Because if the market is to go bullish, it doesn't really need such prolonged oscillation. After a round of pullback, it can just move upward. As you can see here, in the lower region, it took 61 to 62 days, and the trading volume was 1.6 million. So, compared to the upper box we have now, there is still a small gap. However, if the oscillation period becomes even longer in the future, until the volumes above and below become equal, I believe it has formed a strong and powerful distribution zone above. If the price action moves downward, it can truly trigger a good bearish trend. In the process of an upward movement, if we have an oscillation formation, it usually serves two purposes. First, it determines who should buy and who should sell. Let's say you already hold spot positions and have entered long positions before the price reached the upper range, and now the price starts oscillating. At this point, if you are profitable, you may consider exiting your position or cashing out. Some people may choose to enter long positions at this time, which requires a change in holdings. Why is a change in holdings necessary? Because if the market keeps moving in the same direction, and those holding positions continue to do so, they will have high profits. However, when they start closing their positions, it can cause sudden and significant price volatility, like this long upper shadow, which is typically caused by the closing of long positions. What does this mean? Let's say someone starts longing from a lower point and decides to exit when they make a decent profit. The act of closing their position, which means selling, will cause a price drop. Some might start longing from an even lower point and close their position at this level. Any upward movement would not favor the appearance of a spike, as it would hinder the price from being driven up. Hence, the market may experience some oscillation to allow those who need to buy or sell and facilitate the exchange of holdings to avoid such situations. Another reason could be to eliminate highly leveraged positions. For example, if someone holds a highly leveraged long position, a sudden and unexpected downward movement may occur, effectively liquidating their highly leveraged long position. These are essentially the two main purposes for such actions. Now, as we can see, the upper range we have been trading in can fulfill both of these purposes. It requires time to change holdings, and we have already spent 71 days in this range, which is certainly sufficient time. In terms of a shakeout, we have already witnessed a similar sharp drop before, which has already taken out many highly leveraged positions. However, the price has been reluctant to move upward, failing to break previous highs or even test the trend line. Breaking above this trend line is a prerequisite for a bullish scenario, but we have not seen such a situation. Therefore, I believe that the market has gradually shifted toward a bearish sentiment, as there has been ample time and sufficient pullbacks. Why hasn't the market started an upward rally yet? It's highly likely that the market at this level has already exhausted its potential. Now, we can take a moment to assess the length of a small bull run. A small bull run won't last long. It experiences a period of intense volatility in the middle. but doesn't last too long. From the lowest point of the entire trend up to the current position, we have already been in this bull run for about 200 days, nearly reaching the 200-day mark. This duration is similar to the previous bull cycles. Ending time frame. However, it hasn't reached a new all-time high yet, and the daily trend has turned bearish. Therefore, it is highly likely that this trend has already ended. If we are to continue with another upward wave, it will deviate from the historical cycle patterns. Let's also consider that the most aggressive rally during this period was from here to here, lasting approximately 100 days. The price doubled within 100 days. This was an impressive feat. It was really impressive. The 200-day duration represents the entire period, from the market's lowest point to the present. If we look back at the 2019 small bull market, during that time, it took around 193 to 200 days. From the lowest point to the peak of the bull market, we are currently around the 200-day mark, but the price hasn't hit a new high. Instead, the market entered a phase of oscillation and pullback. Therefore, it is highly likely that this bull run has already come to an end. It's very likely, considering the most explosive period. It started from here, where it broke out and continued to skyrocket for about 100 days. The price rose more than twofold within that period. However, if we compare the time frames, the current market situation and this bull cycle don't differ significantly. Hence, it is likely that the bullish phase has ended, based on the previous cycle patterns. Moreover, it has oscillated for a prolonged period, without significant upward momentum, which favors the bearish trend. At this point, we may also be concerned about when the next explosive bull market will begin. It is estimated to be approximately 1 year away. What does it mean? When did the previous market peak? It was around November 2021. So, in the middle of 2020, there was a sharp upward surge. It was in the middle of 2020. If we look back at the previous cycle, the peak was in late 2017. So, the bull market started around the middle of the year, approximately in mid-2016, which is around here. So when will the next super bull run begin? It's expected to begin around mid-2024, which is about a year from now. During this year, the market movement is likely similar to previous cycles, characterized by oscillation and downward trends. If there are opportunities for entering long positions, I'll open a spot position. Based on the current situation, I have already exited my spot positions and adopted a wait-and-see approach. Currently, my remaining funds are reserved for trading contracts. I haven't gone long in this recent rally, primarily due to the unreliability of news. Looking at past experiences, relying solely on news analysis for determining trends is highly unreliable. Therefore, I didn't go long in this current wave. If someone intends to go long, it would be more prudent from a technical perspective to wait for a strong support level to be established above $27,400. After all, going long below this level, especially when it coincides with a resistance level, carries high risks. Let's take a look at the recent rally. This little rally occurred during the weekend. Price gaps can occur in the CME during weekends. There's a gap in the upper region. Currently, we are likely to see a gap, as the price has come to around the $27,300 level. Given this context, the probability of a pullback or retracement in the near future is very high, considering the ongoing oscillation in the market. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.